Good morning, everyone.
Hey.
First, I'd like to thank you for coming and to welcome you. One thing we can all agree on is there is a lot of uncertainty in the market. If you look at various economic indices and parameters, you can say you see some clouds over the horizon. In the midst of all of that, our aspiration this morning is to provide just one thing, to provide clarity.
Government is not, in my view, and there are many different views on this, but my view, government is not the biggest determinant of interest rates because government is quite small. Government, the whole budget may be 7 or 8% of GDP, so it's not the biggest determinant in setting interest rates. The liquidity management of the CBN, the FX demands have a strong influence, in my view.
We're on a journey, right? It's almost like running a company. You have your short-term strategy and you have your long-term strategy. And if I'm to approach it in that manner, I would say the FPIs, they fit into the short-term strategy, while the FDIs are for the long-term.
What we need mainly is the FDIs. On my priority list, I think the major issue is security. Another risk factor is the infrastructure.
The percentage of FDI inflows, that's foreign direct investment, into the country was about 1.5%, as against FPIs, that was about 53% of the portfolio. Now, if you look at that, you'll say we are thriving on hot monies.
If you have a situation where the reserves go below what we expect it to be, of course, confidence will be eroded. FPIs will take a flight, and that what means that we'll go back to the era of scarcity of FX.
The CBN will go through long periods of negative movements in its FX reserves in order to supply dollars to the NAFEX market. I think from a technical point of view, we're okay on 2020. From a more theoretical and inflation differential point of view, I think we could be heading into choppy water in 2021. I think we could be close to 20% overvalued at that point if inflation differentials remain around sort of 9-10%.
So we've seen liquidity driving the yield curve down. So at what point do you think this liquidity is going to dry up?
If you have foreign portfolio investor leaving, what effect would that have on the bond yield in Nigeria, FGM bond yields?
So if they're leaving, it means they're selling, and if they're selling, the yields will be going up, and if the yields are going up, the price will be coming down.
How are we sure that we're going to get that inflow that you're looking at after first quarter? And I find it difficult to really believe that we are not going to end up with a devaluation.
All things being equal, for this year, like I had mentioned, we do not expect a devaluation. We think that the Naira will trade reasonably between the band of 360 and 365 at the I&A window.
I would say the thing I see that will cause the most disruptive impact in the financial services sector is if we have a major shift in the exchange rate. And for us to have this confidence, I would say we pray because we don't have control over it on the oil prices. If you have oil price still go down from where it is today we're even below the government benchmark for the budget. That has its own pressure. So if we have this further go down, then of course it will impact on the accretion to reserves.
As a rule of thumb, and the central bank governor has said this on more than one occasion, you want to keep your reserves above $30 billion. $30 billion or less has been associated historically more or less with devaluations of the Naira against the dollar. So you want your reserves to be nice and strong.
We think that people need to shift their focus away from the challenges that we are facing and focus on the opportunities that exist in the market.
The breakfast session is an impressive one. In fact, I'm quite happy that I made it today to this session and so many key takeaways. Yeah, and the panelists are fantastic.
If we look at our policies as a nation today, we're tilting towards encouraging more FDIs, inflows that are here to stay for the long term, that will have a ripple effect down the value chain and be able to spur economic growth across the sector.
The session was very insightful. It shows a lot about where we are at the moment and what the future is going to be.
Also looking at opportunistic ways in which you can create value for yourselves and your clients. And I do thank Coronation for organizing this.
So what we presented today was on foreign exchange, interest rates, and we presented a bit on equities too.
An opportunity to listen to experts from Coronation Merchant Bank, looking at key areas in the economy. I think for me it was quite enlightening, and I say kudos to Coronation Merchant Bank.